terms of what they're looking at and the investment that they are making. What are you most impressed with?
Well, for starters, both the Algerians and the Kuwaitis have laid out pretty detailed plans, and they are not just talking about upstream. Obviously, upstream dominates, but the Kuwaitis want to improve their refinery infrastructure, whereas the Algerians want to make improvements across the board, which is what really impresses the debt markets. It also says that these parties are committed, that we can be willing participants with NOCs, and let's not forget, the IOCs can also form synergies between the OPEC member NOCs.
Now, when we look at the investment that's needed in this industry, and you hear this from analysts, you also hear it, of course, from the ministers, partly the high price that we're seeing in the market is probably somewhere where people are comfortable with, because many of the analysts say that actually for investment in the future, this price is probably a good price to have. You're talking about $80 a barrel, but it really has to be up around there. It can't go lower, really.
Well, we think that some of these projects, and we're talking hypothetical things here, we think some of these projects might not be profitable if the price, say, plummets between, say, somewhere in the region of $60 and $70. It'll be fine then, but if we're going below $60, they won't be profitable. There was a point in time in 2008 where the price plummeted to somewhere in the region of $37 to $40, and we thought that there'd be a lot of stunted investment, and it got stunted for, say, about a period of 2 quarters, but it was back up on song thereafter. But still, you are absolutely correct. Some people won't be comfortable below a price of $80 a barrel.
Now, when we look ahead to the year ahead and we're looking at global economic growth, I mean, there is a danger that it's very stagnant, if nothing else. Probably the best case scenario is that it's quite stagnant. But in the future, if it looks like it's actually going to decline a bit, the danger of lack of investment, I mean, what's the big warning sign out there in the event that there was a fall in price and the lack of investment, when we look then long term, the damage it could do?
Our market feedback is that some of the NOCs can afford to sort of put some of the projects on ice. So hypothetically, if the oil price plummets, some of the OPEC member NOCs might decide to put some things on the cooler. That does not necessarily mean that they will cancel the projects in totality, because if you look at the forward picture, if you're talking about, say, the next 20 or 30 years, we need these projects to come on stream. So they might be put on ice, and there might be a temporary dip, and we could perhaps look at 4 quarters. That all depends on the macroclimate. So if the macroclimate turns negative, the next 4 quarters could be really tough.
Now, when you're talking to the investment community, what are you hearing back in terms of where they perceive the challenges, the stumbling blocks, issues that they really lose sleep about?
Well, initially they thought NOCs weren't willing partners. NOCs had a big kitty to fall back on, and as such, some of them, especially the Saudis, did not need to approach the debt markets to have these finance. Now the investment community thinks this is all changing. It seems that some of the NOCs are diversifying their sources. They are having multiple projects come on stream, or rather planning multiple projects in the same over the same fiscal year. And as such, they tend to approach the investor community to have these projects financed. If you're talking about loan pricing is actually back to pre-crisis levels. So securing debt was a little bit expensive last year and was very expensive in 2009. But say perhaps Q1 2012 and Q4 2011, we're seeing good loan pricing, say somewhere around 300 BPS above LIBOR.
Now, of course, while the OPEC members will indeed welcome investment into any of the big oil projects, they're also looking at the state of the financial markets, and speculation is playing a huge role, whether we like it or not, in terms of the physical oil on the market and the paper oil on the market. Is there anything really they can do, perhaps to be more armoured in a way to be able to deal with it? Because it's going to go on whether we like it or not, and sometimes it's a very good thing to create that liquidity as well.
Well, I mean, OPEC is converting people around to its viewpoint. This organization's take has been that speculation does spike up the price and has an impact both ways. Our research, or rather my personal research, suggests in 2008, paper barrels outdid physical barrels by 8 to 1. That's how it was. And now the Secretary General expressed his opinion in a speech at the Petroleum Congress in Doha about the same. He expressed pretty much the same sentiments. Now, how can OPEC members buffer themselves? That's a little bit tricky because it's market mechanism at work. But what they have done, and rather successfully in the last 3 years, is convert a few people around to their viewpoint.
Okay, well, we leave it there. Thank you so much, Gaurav. Thank you so much from Infrastructure Journal. Thanks so much.
Thanks for having me.